Hey guys, so I'm gonna try my other mic today, trying my headset to see if this is any better on the sound. Just let me know if it's better or worse than yesterday, and I'll make some adjustments here. But taking a look at SPY here today, kind of the same story we've seen now for I guess like the last 2 weeks. It's just pretty much buy the dip, but it's being increasingly disguised better and better every day. So this morning we had pretty good weakness. We opened red. We came down here and we held this 410 level, which I talked about before a lot. And we came all the way down here and tested 409.5. And then we bounced and we had a lot of chop here, and pretty much we held about $1 range on our closes really until almost 11 o'clock when we finally broke out. Once we broke out though, we hit that 412.6 area, and then we had this big sell-off here that looked like we were going to honestly come back down here, but kind of the same thing as we had yesterday. We had that big sell-off that just found all the support and pushed back up, and same thing that happened there. So a lot of these big sell-offs that are just getting ate up, and then end of day here today, we actually had a big pump on the last candle, about $1 move up. So looking at SPY here on the daily, I wanted to point out last December CPI and January CPI. So in December CPI was the day we had that huge range day where we came back down. It was followed by a small doji negative 0.64% red day. And then after that, the second day post CPI is when we had that huge sell-off. And then kind of a similar idea here in January. We had January CPI. The next day was an engulfing candle that was followed then by a double top reversal candle, and that was preceded by the next big leg down before we bounce. So we actually, if you look at the January CPI right here, we actually have a pretty similar setup here. We had the doji candle on CPI day followed by an engulfing candle. So that would lead us to believe we would have a reversal top candle tomorrow that would then lead to downside on Friday. So biggest thing to note here, as I mentioned, is this 405 to really 417 consolidation. We've just been stuck in this pretty much for 11 trading days now. And the majority of the price action is really happening in this 408.5 to 414 area. And lately, a lot of it's been even closer a tight range in this 410 to 414 area. We have not broken through the top resistance line of this breakout triangle. That comes in at 414.5 tomorrow. And then support would be down here at 409.5, which is where we bounced today. So basically, we just have this big gap here in the middle now that since we had this engulfing. So if bulls can hold this 414 area tomorrow, then we should start looking for a retest of 417 resistance and possibly that 419.5. However, if we see another reversal, then we're going to start coming back down here and thinking about that 410.2 to 408.5 support area. Tomorrow morning, we do have jobless claims and we have PPI. Both of those could be some market moving data. The PPI especially, if you look at CPI, since it had a bigger rebound and obviously was not as bullish as it has been, PPI is actually projected for the index's final demand for January to go from negative 0.5% to 0.4%, which would be almost a 1% rebound. So if we get that kind of rebound with the CPI we had, and Jay Powell said himself before that PPI is important to him, that could trigger a sell-off tomorrow, possibly in the morning. It'll be interesting to see how they react to that data in the morning. So looking at futures here, the biggest thing to note about futures is the same pretty much 40.90 to 41.90 range that we have been trading in. We have a ton of these bottom wicks right here. Which means basically futures is seeing a lot of bearish action, but by end of day it is pushing higher. So that's what happens with all these wicks. And you can see the opposite here where we have a bigger green open that has then resulted to a drop throughout the day. So majority of the price action has really happened in this 41.23 to 41.78 area. That's our big magnet areas that we want to watch. And our futures breakout triangle actually is a little more broad here. So we have room upside to 41.80, and then downside we have all the way down here to 41.05. If we look at the structure of the AEMA here, we did now 2 days in a row wick below the AEMA but hold over it. And we do have that bullish engulfing daily candle right here. So that should lead to some upside. But like I said, with that data tomorrow, that could change the technicals of this. Taking a look at Tesla here, so we're still in that blue bull channel. Tesla actually showed quite a bit of weakness today compared to SPY, and if you look at yesterday where Tesla had that huge $20 day and SPY closed just barely red. In general today, tech was kind of a mixed bag for most of the day, and even Nvidia closed red today, so that was kind of interesting to see Nvidia close red and Tesla show a little bit of weakness on what ended up being a green day for SPY. That's definitely not been the standard. But what we have here is we came up and we retouched that 215 area here. We didn't quite, we hit 214.66, but this 215 level is from back here on February 9th, which is that daily 200 EMA. So we actually have a nice hanging man candle here, which could potentially see some retracement tomorrow. That's generally how this works, especially when you close at your high day. You just generally see a reversal back down the next day. However, this could definitely lead to some upside if bulls can open up over 215 tomorrow, which is at 200 EMA. Really, we have a lot of room to run here, as you can see in this channel, a lot of room to drop. But I still think it's too early to bet against Tesla. But whenever we finally get out of this buy the dip mentality and we finally see a reversal, Tesla will be the biggest one to see reversal. We still have that pretty massive gap down here in the 140s. Take a look at the VIX here. So interesting at the VIX here with this close today. When we look at the previous closes on the VIX, this is a big area that we have found that generally the VIX bounces in. So dating all the way back here to January 13th, you can see all these bounces once we get to this level. And this is actually only the second time that the VIX has closed below 18.3 in the last 13 months. Every time it gets close to breaking through 18.3, which is right here, you can see, it has a wick below and then it reverses the next day. So here on January 13th, we had that 18.3 touch, and then the next day we had a 5.51% rebound on the VIX. That was SPY also had a negative 1.8% red day, and then was followed by a negative 1.58% red day. The next time this happened was right here on January 27th. We touched the 18.3 area, but closed over it. It was followed by a 7.73% rebound, and SPY had a negative 1.25% red day. And then we had right here on February 1st, this is the only other time we have actually closed below 18.3. We had that 4.82% green day. So on that time, though, SPY actually had a 1.46% green day. This was also around FOMOC. This is where we had FOMOC on this day right here, and this was the next day where we had that massive green open. And then the following day was a negative 1% red day. And then we have this February 3rd right here where we touched it again, 18.3, but closed over it, and that was followed by a 6% rebound on the VIX and a negative 0.61% red day. So pretty much what you can look at this data and see is every time we break below 18.3, within a day or two, SPY will see a reversal back down and see a red day. So obviously that could be tomorrow, that could be the next day. But if that happens, we could have that top candle like I was talking about, which happened in this pattern here before we have that bigger red day down on, which would be Friday. However, if that PPI comes in hot tomorrow morning and the jobs data comes in not as favorable, then we definitely could see that bigger red day tomorrow, and we could look for the VIX to try to come back up here in the 18 or the like 18.8 to 19.5 area. So the other interesting thing today is Bitcoin. Bitcoin had a huge, almost 10% green day today. It was consolidating down here around that 200 EMA, and then yesterday got a little bit of bounce, but it wasn't looking so favorable. But here we are, we had a massive 10% green day here, almost 10% green day here. A lot of this, I believe, has to do with some regulatory efforts. Basically, let me see if I can find it real quick here. But they're talking about how they're going to introduce the Financial Freedoms Act, which aims to stop the Department of Labor from restricting individuals from investing their 401ks into crypto. So basically, crypto is popping because the Fed could potentially lower some regulations, and of course, a speculative stock thing like this is going to rally on that news. So, but all right, well, I hope you guys had a good day trading today, and I will see you guys tomorrow. Thanks for tuning in for this video. Don't forget to subscribe, follow, and like to stay updated. Drop a comment if you have any questions. This is the permanent Discord link. Sometimes that does not work for whatever reason. Just go ahead and drop a comment, send me a message, and I will get you an updated link so you can get to the Discord. Some of the advantages of the Discord is I do a pre-market update with key support and resistance levels every day. And also throughout the day, I do live intraday commentary on SPY and the general market. And I also do live intraday buy and sell alerts. You can follow me on YouTube, Twitter, Instagram, or TikTok as SPY Optionaire, and on Reddit as Daddy Dersh.